Oh,
Good
there he
morning.
is.
There I am.
Tricky Nicky, what's your thought here on the Herbalife saga?
Herbalife Saga is just interesting to watch. I've not traded it. What's the latest is Ackman. I have a feeling that Ackman is not as stupid as he looks in that trade. So, yeah,
He's been starting to be proved the winner here. He looked like a real loser there at the beginning of last year when the thing went over $80. But if he's still holding on, he's having a pretty good year. He's got a lot of his losses back, and he might actually be up in this trade.
I think he was made whole in the last couple of whooshes down, even though and recovered from those down whooshes because he's a
Yeah.
smart guy. He's not going to just sit back, and he may have played the options as well because I don't think he's required to disclose his options plays. So we don't know what he did on the option side in order to cover his butt. But yeah, it's interesting to watch. It was a little embarrassing to watch two grown billionaires hash it out in public like that. But I'd watch it again. I'd probably pay for it too. So these markets are at levels of breakdown or breakout, and they're not committing either way. The momos is just a symptom of it. I heard you guys talking about it. I guess we can start at the macro. Yesterday there were two bad signs for the bulls. One, Apple. It had great numbers over the weekend as far as iPhone sales are concerned,
Yeah.
and yet it couldn't hold green. It went red for a while, and it just couldn't hold its pop. The other sign is Baba. The second coming of Christ. They made it out to be largest this and largest that, and bam, big red candle couldn't hold one day. It's impressive that it popped from wherever it opened, $68. It was slated to open to actually 93 close or whatever area it's at now. But if it was this badass, why did not hold one day worth of greens? So basically, what it tells me is that what my macro thesis has been all along is that the bull is tired. It's not dead, but it's tired. So people who are completely buying the dips blindly for new highs immediately, starting next week, starting tomorrow, starting 3 days from now, it's wishful thinking. It could happen, but it's a long shot. It's a very long shot. It's more likely for us to meander than pop. And at this point now, it's looking like we have some levels to hold here, or I've been telling you a couple of weeks, or at least a couple of weeks, that we're having these whooshes down, and one of them is going to catch on and snowball to a little bigger than a regular whoosh and buy the dip after just two red candles. And there are a lot of signs that support that. So what changed yesterday, you guys? I heard you talk a little negatively today that this could be it, that we've made the turn. I'm going to ask you what changed fundamentally. And I'm
Well, I don't think anything's changed fundamentally here. It's just the same pullback. If you put it in perspective, we're only really off 1.5% from the high, so it's hard to get full on bearish here. But we always talk about these quadruple witch days,
There
and
you go.
sometimes these days can actually be turning points.
right.
And we actually, even on the Friday there, we were talking about the huge buy imbalances, and it looked like, man, everybody wanted in right at that open, and it looked like it might be the short-term top. It did turn out to be the short-term top of the last couple of days here. Whether we're still, coming on to a full bear market here, I don't know yet, but I think you're definitely starting to see some major resistance up there at the 2000 area.
Well, the resistance has been here, so you're right. Nothing did change, and that was my the major message in my write-up last night as to trying to figure out what happened and where to go from here. So nothing has changed. It's just the media coverage and the trader focus has turned into looking towards the perils that are in front of us, but they've been here. They just have had blinders. We've had unhealthy real estate markets. That was part of the buzz yesterday, correct? And we had some real estate issues. Well, these have been here for a while. Every good real estate report I've ever had this year has been, oh, we've had so many, and then half the sales are cash. Well, these cash sales are house buys, not home buys. They're flippers, they're investors, and they will disappear at the drop of a hat. And so it's an unhealthy balance. And then the second thing was China growth. Well, it's been in question since last year. Remember when one time one of their PMs or somebody high up in the government says, well, 6.5 is okay. And then, when we were looking at 7.5 and 8 at the time, and then the next day they backtracked with some statement, well, we didn't really mean 6.5, 7.5 is also okay, kind of a deal. So it's been on the table for a while. So now we're suddenly focusing on it. There's nothing new. It's just sentiment. So we go back and look at the levels, and they're pretty scary. Like today, the SPX is going to be probably looking at a bottom end of a rising wedge from the last month or so, and a better hold, or 1950 comes into play. You said resistance. The options market for the last 3 weeks has been telling us 1950 to 2000 is the play area for the SPX. And we've been at the upper end of it. We tried 2020, and I shorted it, and we made money on it. We shorted it via the credit call contract for this week, 2030, 2035. So we sold 2030 when it was towards 2020, and we bought the 2035 behind it. It was somewhat of a risky move for me. I usually like to play a little further, but it was too enticing, and it brought in good money, and we're out. And now I'm trying on the long side a little bit, but I will quickly pull the trigger and shut that door down too.
One thing as far as I don't know if you could really call this the fundamentals, and we've talked about this with J.C. Peretz, and he talked about the oil sector usually, being the last one to rally in a bull market, and that's really the scenario that you had with ExxonMobil and Chevron. They sprinted to highs here at the end of August, and now they're solidly off their highs. So those are two of the top 10 stocks in the S&P 500. They've been pulling back for quite some time, so perhaps they've indicated a little bit of a turn in the market.
Well, JC is really smart, and he's very good with the charts, and I might have a point, but I think that the oil market this year was kind of like messed with because of geopolitical events. So I'm not so sure that the seasonality argument holds untainted. So I'm not smart enough to figure that one out. And it might be another piece of the puzzle. So I'm looking at other pieces. JC just gave me a new piece, and I'm going to have to go hunt it down.
Okay, what
So,
about some of the other momos here? Pulling back here, that price line. I mean, if you blinked, you missed it at 1200. Did you get any shot to get some downside exposure in price line when it briefly traded over? And what was that? Was that an expiration Friday? Yep, there you go, Dennis. Expiration Friday sticks its head above 1200, and kaplooey, we're $40 lower.
yeah, well, Priceline is definitely a Momo, although it has meat. The fundamentals are good on Priceline. That's why when, it's a decent, nice knife to catch as long as you have a good size handle on it. And right now, I don't see a good size handle because it's in a squishy area. If I look back in that zone where it's at between 1100 and 1200, the candles are big. Remember shoots and ladders? It seems like we don't want to stick around in this area for some reason. So I'm hesitant to catch it here. It had it has a level. I wish I can show you my chart. I should upload it next time. Maybe I'll upload it after I get off the phone. But I drew a line that is still into play, and it's about the 175. It's a downward slanted from the peak of about 6 months ago down to another peak, and then it seems like a level that comes back into play, and it uses it as support at once, and now it's trying to decide whether it uses it as resistance or support. Bottom line is Priceline could get to 1100 in a blink of an eye and could bounce back to 1225 in a blink of an eye. So that's why it's called a Momo, right? So at this point, I only play it with lotto money, meaning I won't put a full size position on it. I try to catch puts or calls whichever way I want to bet. So if you're bearish, the market and Priceline is going to certainly follow the market. I would buy some puts and Pricelines that are way out of the money as a lotto ticket, or close to the money as an investment. So, but keep the size small. The momentum stocks that are frothy are easier to play. You mentioned Netflix earlier.
Yeah.
If you pull up Netflix, I said last week it has plus or minus 100 points in it soon, because it went from really wide range, squeezing, and I can argue 2 points, some sort of an inverse head and shoulder from about 8 months ago that will give it plus, 70 to 100 points, or if a rising wedge is going to break down and suck it down to 400 really quickly. Right now, it's looking like 400. Yes, last week I had a 435, 430 put spread on it. Unfortunately, it was one day too soon because it hit 438 yesterday, so mine expired worthless, and I lost on that one. But I'll still short it here. as a lotto play, not a full-blown position in investment. I'm even comfortable throwing credit call spreads to finance to put spreads in that and see what happens. But if you're not in the short here, I'd want to wait another day to see really where the markets are committed.
What about Google here? You haven't talked about this one, and we haven't talked about it on the show for probably a week. It's had some pretty good relative strength. It's held up fairly well here. Actually, a couple days ago, it was approaching the highs. It did pull back a bit there yesterday, but what are your thoughts here on GOOGL?
I like the company, and it had a great run from 9:15. Even when markets were turmoiled, it was a cranker. Something happened on 9:19. If you pull up the daily intraday, it opened with a giant green candle. I mean, volume-wise, was massive compared to anything around it. I don't know what happened that day, but that was towards the top where it fell apart yesterday. Although it didn't get treated like a complete Momo, I think it was down relatively better than the Momos. This week, I can tell you it's looking more bearish than the setup in the options. Open interest is more bearish. Like the 590 was immediately resistance, and I told the folks that don't chase it on the upside because the options don't it's not conducive for upward movement. And on the downside, I really don't see a hard line in the sand to defend. 580 is a bump in the road, but other than that, there's no defensive lines. So it's more likely to leak downwards than leap up. So credit call spreads, bearish positions would work in Google this week.
Hey, Nick, thoughts on the plays as a result of the U.S. Treasury steps to curb these inversion deals? Is this too much news for you to trade, or do you see some potential plays in the market?
I don't know how to play that. I'm not smart enough to figure out who's a candidate to actually invert. So, and I don't know what the politicians are going to do. Maybe I'll wait until after the fact and then decide what I can play with that. But I really don't know enough about politicians, nor do I know who's an actual candidate. So if you have a name or two, we can debate that. But for me to pick names out of the blue, that would be a complete wild guess. And
well, we're seeing pullbacks here across the board in a lot of these stocks that had actually already announced takeovers. We're seeing SHPG, which is actually down 12 points here. And they were announced being taken over by AbbVie, which is the acquirer, which is ABBV. Maybe we should look at ABBV first because they were the ones that were actually doing the acquiring to try to save the tax. Yeah, and you're seeing this across the board. You're seeing it from Medtronic, Millen Labs. So there's a few stocks that are really taking some heat here on this, and ABBV is one that's taking the most heat, maybe.
Wow. So what's the thought there now? That fundamentally that they're not going to happen because the politicians are going to go shut the door on that.
Correct.
Or they're not going to get the benefit. If they do put the deal through, AbbVie was going to get the benefit from the tax. So that's why they're really jacking the price up. So even if the deal goes through, is there as much benefit for them now? So that's why I think they're smacking the acquirer here as well.
Yeah, it looks like the AbbVie is decided to get back to the area where it was playing before. So technically, if you want to chase it, reset your trading based on the previous, if you draw a line in the middle, like a regression line, it's probably right at it. On the downside, if it wants to overshoot on the downside, you won't break if there's an uptrend there. If you draw from the two lowest peaks down, it gets you to about 54. So yes, it's a big move, but now it's back in line to normal trading ranges for it. So what's it do from here? It would be lucky if the markets don't drop further, so it should stabilize, maybe overshoot, and the worst case scenario would be at 54. If it breaks 54, then you got to ask yourself another question. So.
And
Spice also saying AstraZeneca, which is one of those stocks that has been rumored to be acquired and had multiple bids there for a tax inversion play. That stock is pulling back $4 here this morning too. It's down at 70.80.
What's the ticker on AstraZeneca?
AZN.
Yeah.
Significant pullback here this morning. Big volume too. 379,000 shares have traded.
almost same comment as that one, except the lower end overshoots with 69. And I'm simply drawing a line connecting the two lowest peaks down. And then the third one, if it happens, should be 69. And if that goes, then you should ask yourself another question. But here, the regression line is higher. So it's been toppy for a while. It gapped up a few times and reached for the sky at 81 a while back, about, I'd say, eyeball 5 months ago. And then it reverted back to a plateau. Went down to reach the 67 level for like a peak one day, like peak as a look, but then it went back to that same plateau, and now it lost the plateau. So it looks like it wants to be around this area rather than the higher area. So that makes it harder to gauge as to where it wants to rest because of those wild swings up to 81. But 69, and then I'll start asking questions on my long position, see, maybe I want to revisit that or defend it somehow.
Nick, what do you think of gold here? We're getting a little bit of a bounce back here, maybe call it a dead cat bounce, whatever you want to call it, with the overall weakness in the market. Got down to 12.12 yesterday. We bounced up. We're as high as 12.26. We've been as high as 12.36 today on the October gold futures. So we've given back about half of the gains already here. Is this one of those where gold has been so weak that everybody just sells every pop? Or is this a new start of maybe a bottom here, and maybe some of the gold bugs can get some life?
You know, every time it gets around this area, it tends to pop. And gold is, I used to trade a GLD, but not anymore. I feel like it's, what do I say, well organized. It's not rigged, it's well organized. I don't know how to play it anymore. It seems like there's so few fingers in it, but playing it from so many different angles, I really can't tell. So I don't have a beat. I'd rather play something where at least I can know that there's a news flow I can predict. But here it seems like everything affects it. You know, something happens in Zimbabwe, it affects it because of gold collection or something. In theory, why is gold ever down? If we're running out of it and it's getting harder to dig, shouldn't it be going up and away? It shouldn't ever be down. And this is a really strange plays in price. It doesn't reflect the stability of the theory of owning gold. So it's above my pay grade, so to speak. But technically, if I were to take a long shot here, I wouldn't be crazy, because every time it comes down, it seems to bounce. I also I saw somebody sent me an email. People trade gold based on full moons. Look it up.
What?
Listen, look it up. It's if the data is correct that they're putting it on charts, every full moon it sells off, and we just had a full moon like 4 days ago or something. So I don't know. I'm just telling you, it's above my pay grade. I don't touch it anymore.
Hey Nick, before we let you go, I know you're involved in trader education this week on the MarketFi platform. Could you just tell us about that quickly?
Absolutely. Hopefully the team there can throw the link out there. If not, I'll throw it right after. We have an education week going on at MarketFi, and they do a great job getting together some people that talk about their areas of expertise. And I'll be talking about how to, so to speak, master credit spreads. So I'm just going to cover option spreads and how to play them in any market condition, not necessarily up or down. So it's a good way for any traders of any level to get exposed to the world of credit spreads and demystify it a little bit. It's really misunderstood. You know, the first impression I always get, you must have a tough life or a tough gig. Not really. If you set your, like right now, this morning, I only have one spread I'm worried about, and worst case scenario is $4,000. So if the market goes to zero, that's all I'm looking at. And I think I'm pretty lucky if that happens. Well, unlucky if it happens altogether, but pretty lucky if that's the only thing I suffer. I'm pretty sure I'll be ahead of 99.99% of everybody out there. So credit spreads needs to be demystified for a lot of traders. It needs to be in part of a portfolio of any active trader if they do options at all. So that's what we're doing. It's going to be fun. If you can join us, it's free, and we'll give out confetti at the end or something.
Okay, all right. Nic Chahine, creating income with option spreads, going to be on MarketFi later on today. Nick, great input as always. Thanks for coming on. We'll talk to you next week.
Thanks, guys. I appreciate it.
Okay.
Thanks, Nick.